I'm chuffed to welcome Ian McKinnon from Financial Clarity today. Ian, thanks for joining us.
Thank you.
So let's start off, lift the lid on Financial Clarity. What is it you actually do?
Okay, so we're a financial services business, as you know. Our core activities centre on a lot of mortgage lending for buy-to-let investors, first-time buyers, and in actual fact, a big part of our business for people requiring later life lending in retirement. Alongside that, we protect families with a lot of various insurance products for not only insuring their homes and property, but also to insure them individually for health and illness. And alongside that, we do some estate planning work.
Quite a lot then. So let's break into it bit by bit then. So the mortgage market, talk to me about how that is at the moment and what's going well and what are the challenges there?
The mortgage market right now, I think, is one that everyone seems to have on their radar because interest rates, as we know, have what I call normalised. People say they've gone through the roof, but after 10 years of record lows, it just feels to me as if we're back in a normal environment. But it's challenging for a lot of people. It's challenging for household finances. And in a lot of respects, I think that's what's driving the later life market, where a lot of people who are able to are releasing equity from properties to support younger family members.
Okay. And are you seeing that become more popular?
Very much so. But also there's a real requirement for people now to access money more than ever before. I think general cost of living is driving that, and that's not specific to one demographic. I think it's across the market.
Yeah. So some folks think it's fairly straightforward to get a mortgage. What happens? I come to you to ask for a mortgage. What happens behind the scenes? Is it quite complex?
It can be. I think the key to mortgage lending is how organised you are as an applicant. And unfortunately, right now I'm seeing a real trend of people who think it's okay to go and offer for a house, have their offer accepted, and then, turn up at our office, which I'm delighted with, but they turn up very poorly prepared and think that we have, capacity to stop everything else that we're doing, to look after them, which we're absolutely delighted to do. But they almost think that the process from start to finish is a few days. And in reality, people should prepare for, probably when they're well organised, a 4 to 6 week journey. And they need to recognise that in a couple of days, we're not able to tell them too much because we rely on third party feedback from lenders. And that in itself is challenging at the moment.
So the lenders are taking a while to get back to you?
They can do, again, driven by their own service levels. And I just feel as if people need to take advice at an earlier stage to understand the makeup of their income and how that's going to impact on the lending application, levels of deposit, understand what their unsecured debt level looks like in relation to their income. And there's various things that lenders consider, none more so than a strong track record.
Okay. And so for people unfamiliar with the lingo, unsecured debt, what does that mean?
So unsecured debt is usually things like personal loans, credit cards, overdraft balances, things like that.
Okay. So ideally, if I'm looking, or I think I'm going to be in the market for a property, I should be coming to you, 6 weeks out?
Definitely 6 weeks out. First-time buyers, we have a lot of them coming to 6 months out, just to try and understand what that process is going to look like. Everything from how do I interpret a home report, how do I engage with a solicitor, and so on. And over many years of doing this, we have good provision to help people with that entire process. Okay.
So maybe a bit longer out than a lot of people are considering at the moment then in terms of getting some advice?
Yes.
Okay. So you talked then a bit about equity release. So we've seen a surge in that. Is that popular at the moment?
We're seeing a huge growth in that area. It's an area of the market that the Financial Conduct Authority recognise as being specialised. It's an area where not every mortgage advisor or mortgage provider can offer advice because they don't have the relevant qualification or permissions. And it's an area where there is a keen interest from the regulator to keep that market robust and safe, because ultimately we're dealing with our average client age historically in that market has been around 73, 74. We're seeing that reducing a bit now. People are accessing funds from their property a bit earlier, but nonetheless, they may well have been out of that process in some cases for 30 or 40 years. And it needs to be dealt with just a wee bit differently.
Okay, and you say a lot of that's because they're maybe wanting to pass money to younger family members, is that correct?
Yes, yeah.
Okay.
So legal in general, and there are of course many other providers in the market, but legal in general spend a lot of money on market research.
Yeah.
And it's in the public domain. They do a whole series called the Bank of Mum and Dad.
All right.
And statistically, the Bank of Mum and Dad, or grandmum and grandfather, are the 9th biggest lender in the UK.
Really?
Absolutely. They see a lot of first-time buyers having deposit support from parents and grandparents. Yep, and that's what drives a lot of that market.
For their first house?
Yes.
Yeah, okay. And you specialise in equity release yourself, don't you?
Yes.
You deal with a lot of them. And from across the UK?
All over the UK. Currently, I've got cases on in the Highlands of Scotland. I've got cases on in the far south of England and everywhere in between.
Okay, so keeps you busy.
Keeps me busy.
Yeah.
Absolutely. Keeps me challenged and keeps me, keep busy. It's probably a good summary.
And so one of the things we talked about, or have talked about a lot, are insurances, both for individuals and those running businesses. Tell me a bit about that and some of the experiences you've had in that area.
I've been in this market now for almost 20 years. I'm in my 18th year running this business. And we've been very, very fortunate over the years that we've had a team of loyal clients. I know I'm getting older when I'm now dealing with our children, people who were clients of mine for a long time. And we've always had that responsibility and that duty of care to arrange the mortgage debt and arrange that big expense for a family, but at the same time to have the foresight to look at what happens when, death and illness visits that family, and a loss of income, because that's probably the biggest area that's going to lead to a family losing their dignity, losing their home ultimately, and it can have real long-lasting impact on people's mental health and relationships and so on. And we need to, as a market, understand that this is not a luxury add-on. It's really an essential part of what underpins a family's finances. I find often that families do a lot of good things. They invest well in property, they invest in their children's education, they invest in pensions for retirement and so on. But the biggest thing they don't protect is their income. And protecting their income and making sure that there's always cash flow is, for me, vitally important. But I see it overlooked often.
And it doesn't matter if you're self-employed or employed?
Absolutely not. In fact, for a self-employed individual, they will not have employee benefits of sickness. They don't all qualify for government-led statutory sick pay. And in actual fact, if you were to conduct some kind of survey around about the self-employed individual and the financial, resilience that they have for savings, for ongoing income, for the ability to even do things like pay tax bills and pay into private pensions, most of them are literally days away from a real financial shock if they're unable to work.
Well, that's a scary thought, just days away.
Yeah, most people are.
So if I'm self-employed and I haven't got income protection, then
you should get it.
Yeah, everything stops after that. And just to be clear, income protection is very different from something like critical illness cover.
Absolutely. So a critical illness deals with, by definition, a critical event. That could be something like a cancer, heart attack, stroke, MS, Parkinson's, all that type of thing. And generally speaking, what happens in that market is that leads to a lump sum payment to replace, hopefully, income for a couple of years while the individual recovers and gets back on their feet. But income protection is something completely different, because income protection is a product where it gives you monthly cash flow as opposed to a lump sum. And it gives you it on the basis that your own medical practitioner, your own GP, has deemed you unfit to work. So if that's the self-employed individual, they might need to have their benefits at an earlier stage. If it's someone employed and maybe a public sector worker, their employer may well cover them for the first 6 months of sickness, and therefore they can defer the insurance benefit and ultimately reduce premium.
And what percentage of people do you think have income protection?
It's a very low number. The numbers obviously change. There's a lot of research to say that in the UK, there's somewhere around 9 million pet insurance plans.
Right.
And there's about 4 million income protection plans.
Really?
Absolutely. And for me, the income protection direct debit that you pay is the most important one, because that guarantees all your other direct debits. And if we think about our bank account, for most people, they've got a couple of entries per month for income and probably 10 to 20 direct debits that are important to them and important to their lifestyle.
Yeah.
And if we take the income out, or we reduce it to state benefits of between £400 and £500 per month, most people are going to struggle to maintain their direct debits. So for me, it's very, very important.
And why don't more people know? Do you think people don't know about it and so don't do it, or they don't see the importance of it?
I think people live their life on the basis of, it'll never happen to me.
Yeah.
And when, in March of 2020, when we had the COVID pandemic thrust upon us, it was amazing to see the upsurge in income protection sales. People who understood that they weren't invincible. And it's funny, because people live their lives thinking this will never happen to me. They take sometimes mortgage commitment for 30, 35 years, either right up to retirement or into retirement, thinking this will never happen to me. But the same people always carry a spare wheel in their car.
And are you able to share any stories of where you've helped families and actually they've had to call on the insurance?
We have regularly paid claims over the years. In 2023, we paid the biggest claim that I've had in my entire career. Unfortunately, circumstances are not good. Unfortunately, the individual's life will be limited. And the family, however, have got real financial security for their future. And I think that's important. And ultimately, the first thing that people should be doing is protecting their income. Because I look a lot at first-time buyers, and they've sometimes saved for between 5 and 10 years to build a deposit. And just when they think they're getting close to being able to afford the deposit and afford the mortgage payment and get into their own property, illness can mean that they need to dip into their savings to start paying bills to protect their credit report.
Right, okay.
And to protect their credit profile. And ultimately all that's doing is pushing that dream of home ownership further away. So for me, it's not something that should always go hand in hand with, I now have a mortgage commitment, because we've all got lifestyle commitments.
And have you seen, with the cost of living crisis in the last few months, have you seen people maybe thinking about cancelling their insurances?
Very much so. We have a quick response to that. We tend to phone the applicant or the client. We would always remind them of why we gave them the advice initially. We would always discuss with them if there's any other areas of support that we can offer them. Can we temporarily reduce the cover but maintain it?
Yep.
Can we look to help them with budgeting or cost saving in other areas? Because insurance is a product that you get when you don't need it. And when you need it, you can't get it.
Yeah. Good way of putting it.
And it's a very, very important part of underpinning a family's finances. I have never had a situation where we paid a claim and the applicants came to me and said, they've actually paid us too much. No one's ever said, I've got too much.
Yeah.
Yep. And most people, if they believed they had a claim sitting ahead of them, they would absolutely take more insurance. Yep. So for me, it's an essential part of the financial planning. It's not an add-on. It's not a luxury item.
Yeah, it's interesting because since I've talked to a lot of clients about it, and I would say 90% don't have it. So
yeah,
interesting that your stats kind of back that up.
Yeah.
So you talked about estate planning, something else that you do,
yes.
You touch on. So again, for those that don't know what estate planning is, what are the ins and outs of that?
So just to clarify, through my FCA regulated financial clarity business, we don't conduct estate planning business.
Yep.
I have a separate sister company which I own 100% of as well, and in there I'm a qualified Scottish estate planner, and I must stress that it's Scotland only.
Yep.
And in there we have a real feeling and a real desire that all of our clients should have a valid will, and that clients should consider the granting of power of attorney in case in future life they lose capacity and they need someone else to act for them legally.
And a lot of people think power of attorney is an old age thing, but it's not, is it?
Absolutely not. It's there's more take up with people in old age, that's for sure. But there's only one story from my career that I can tell you with confidence of the younger applicant requiring the power of attorney. And essentially what had happened was we had a married couple who jointly owned their property. And sadly, the male was in quite a bad road accident and was significantly incapacitated physically and temporarily. He had a mental impairment as well, which fortunately that returned. But during that period, the family made a decision that to make their lives easier, they were going to sell the property. Yep, they were going to move to something that was more suited to the physical impairment, but couldn't do it because it required both of the property owners to authorise the sale of the property.
Yeah.
And one had no capacity.
Yeah.
And that became a real hardship on that family. Fortunately, they've been able to move on from it, but that's just one example of power of attorney being so important for someone younger.
Yeah. And I guess it's the same as wills as well, because you just never know when something's going to happen. I remember a family member of mine died without a will, and that became a real headache for the family in the time where we were grieving as well.
Yeah.
So, I mean, I guess how many people do you think have a will?
Statistically, there's more than 70% of the population that don't have wills.
Don't have, right? Okay.
Don't have wills. And wills are, the myth is that they need to be really complex. And some people talk to me and say, I don't want to make a will because I feel as if I'm almost, encouraging my death. And, sadly, we all die.
Yeah.
So death is inevitable, but it's more about being organised. And I don't believe it's a document to fear. I believe it's a document to put in place to underpin all of the good stuff that I touched on earlier that people do.
Yeah.
And the simple description of it for me would be that your will becomes your voice after death. It becomes your ability to make it really clear to those that are left behind how you want people to be looked after, how you want assets to be looked after, and how you want people to carry on and enjoy those assets.
Yeah. And it's important, you don't need to have loads of assets to have a will. It can still, just be about what you want to happen after you go.
For some people, they believe they don't have any assets, but probably the biggest asset they have is each other and their children. Because we also need to take the responsibility for children and appoint legal guardians, and that's something that's very much taken up in the will.
Yeah.
And that leads on to something else where it's great to appoint legal guardians. It's great to know that your children, in the event of a trauma like bereavement, would be with people that you've chosen and with people who they know and that will care for them.
Yeah.
But there's also the financial implication of that as well, because raising children's expensive. And that's where both of our worlds of estate planning and financial planning come together and can operate as a real strong solution for families.
Yeah, yeah. So tell us a bit about your business journey then. You said you've been in business on your own for 18 years, is that right?
Yes.
All been plain sailing?
Absolutely not. So if you are of a particular age where you can track back 18 years, it means that we've lived in business terms through the market crash, 2008, 2009. We've lived through a period in our career where the mortgage market had flatlined. We've lived through all manner of regulation and new regulation, everything from the Mortgage Credit Directive to European regulation and so on. We've lived through a COVID lockdown and Brexit. And here we are. We're still here. We're still fighting the fight, as they say.
Yeah.
And it's been very challenging, but it's also very rewarding. And we've got a lot to be thankful for in terms of our overall client bank. As I said earlier, I find myself now dealing with my clients' children. And that in itself demonstrates longevity.
It demonstrates what a good job you do.
Thank you. There are many, many good advisors in the market, and I would urge anyone to don't try and do this alone.
Yeah.
Go and take advice. Go and understand that, there's a value to advice. I guess what it does demonstrate is consistency. And that's been an area of my career that I've had to stick with. And I've had to basically tell myself at times, just stay consistent, stick to certain principles. And in some respects, I look back and think, maybe I could have done things differently. Maybe I should have done certain things differently. And when you own a business and you don't have any other sounding board, I think sometimes you can get caught in your own train of thought.
Yeah.
Yeah, and I think it's important, therefore, to be able to look back and see where we would have done things differently and acknowledge that and try and make the future a bit better.
Yeah. And one of the things I've written down here actually is I really enjoy about working with you is how disciplined you are. You do what you say you're going to do. I don't always see that, but where does that drive from?
I think it's inherent in my nature that I don't want to let anyone down. That's just me as an individual. That's me, I guess, in life as well as business. That's me with my family and friends. I heard a saying a while ago that the way you do anything is the way you do everything. And I'm very, very conscious that we don't get everything right in life. But I think if you approach things with the right ethos and the right character traits, then more often than not, you'll represent yourself well.
Yeah.
And I just try and live my life not to let people down, I guess. So if that equals discipline, fair enough.
Yeah.
Yeah. some would say that there's an element of stubbornness around some things as well. And there's certain things that you and I have discussed where, you know, it would have been kinder on me and kinder on others had I let certain things go. Yeah, in terms of business operation and the things I do. Yeah. So that's part of, I guess, my ongoing personal development and my ability to foster a high level of trust in others.
And is that the biggest change you would see in yourself as a business owner from maybe the Ian of 5 years ago?
I think the further on you go, you gain better experience. Hopefully, as we get older, we gain more wisdom as well. And yes, I would like to say that I'm more susceptible or more willing to change and willing to give other people opportunity and responsibility. In some areas I could have done things differently. In some areas I could have made bigger decisions and been braver around about certain decisions. But I think in my own frame of mind, I'm risk averse as an individual. I watched people losing businesses that they'd worked really hard for during the market crash when we were a young business. And I vowed back then that it would never be us. And that in some respects may have held me back. But you know what? We're here. It is what it is.
Absolutely.
You know?
And you've got a thriving business now, haven't you?
We have.
So you started to get really quite clear recently, more recently as I can see, on your numbers, your targets, KPIs, who's doing what benefits that brought to your team?
It's brought a lot of benefits. I've ran this business where it was only me. And I've ran this business where our biggest number, there was 8 people. And that doesn't sound like a massive business. But as I say, it's been a business that has had steady growth every year. We've grown through challenging markets. And from a team perspective, I always worked on the basis that we paid the bills, we never defaulted in anything. There seemed to be a bit left over in the bank, but you can't grow from that point of view. And you need to learn that financial forecasting is important, awareness of your numbers is important, awareness of your cost base is important. And these are all things that you and I have worked on over the last 2 and a bit years. These are areas of my business now, as you know, where I am very, very clear on our numbers. I'm very, very clear on a monthly basis what our profit position is, both in a monetary sense and a percentage of our overall turnover. And I'm clear as to where I want to take the business next and what we need to do to get there. I believe I've got clarity there as well. I think an important lesson for anyone is everyone talks about what they want to do. And everyone focuses on, this is what I want to do. And for me, I've tried to look at that with you and with other people whose opinions I value and family members and so on. But often you need to marry that up with a real clear understanding of what you don't want to do. And that's probably taken me a long time to get to that point. And I'm adamant now about certain aspects of our work that I don't want to do. That is for someone else to enjoy that opportunity, for someone else that I can support and give them 20 years of experience. And I can start to slow down a wee bit, start to choose the parts of my work that I enjoy. And, as I say, support growth in the business for the future.
And, hats off to you. You've done loads of work on that, and you're the clearest I've ever heard you be about, what the next steps are moving forward. So it feels like you're in a good space, Ian.
It feels that way. We've got a few challenges around about recruitment. because, stand up, the business owner who got 100% of their recruitment correct.
Yeah.
I hear, I'm a keen follower of football, and I hear managers talking about, the recruitment processes and what was good and what was bad. It's in every walk of life, we don't always get that part right.
Yeah.
When we become more clear and more focused and more selective, we find that there's less candidates.
And that's what you want, really.
Absolutely less candidates. So the next part of our journey requires the right people. Yeah. And that's the challenge that we're currently facing.
And if you were to give advice to someone maybe earlier in their business journey, what would your advice be?
I don't mean this to just fit the mould of this session, but if like me, you are a sole owner of a business, you need external consultation with someone. Yeah. You need someone to challenge your thinking. You need to recognise that there's a responsibility to run your business effectively. But more importantly, I think you need to start with the end in mind. And I know that's very much cliched.
Yep.
I have clients who I've learned so much from, who come to me for advice, but I take more learning from them. I have one client in particular who started a business in manufacturing, and the day he started it, he said, I'm in this for 5 years.
Yep.
And he was out in 5 years with a successful sale, and he's now moved to something different that he's chosen for his life at this stage. So I think timelines, I think clarity on what your exit should look like.
Yep.
And make brave decisions. I wish I could have been braver earlier, but I had a young business, I had a young family, and no real cash reserves back then.
Yep.
And therefore, bravery was not on the cards. Survival was on the cards.
Yep.
And that's what I worked for. And after a while, there's not a mark in the ground where you think it's all of a sudden it's different. I think you just gain a level of traction. You gain a level of understanding of business. And I think it's a separate skill to run a business than to be, for example, a financial advisor or even, a construction worker or anything else. The world's full of good tradespeople, but they would be poor business owners.
Yeah, but whoever tells you how to run a business.
Yeah, exactly. Yeah. That's it.
And you're talking about that old competence loop there, The more you do it, the more you learn from when things don't go right. So you get a bigger level of confidence to make different decisions.
Yeah, absolutely.
Yeah. Okay. Well, look, Ian, thank you for sharing your business journey so far. We wish you lots of success moving forward, and I look forward to hearing what the brave decisions are.
Okay. Thank you, Yvonne.
Thank you.